For the first time in 6 years, the U.S. government has shut down. This has disrupted some government services, but for most of the economy and most of your day-to-day life, nothing really looks different. Today, we're going to dive into what really changes and what that means for our investments and what does it look like going forwards.
Yeah, I think it's always interesting when something like this happens. It feels like we have some kind of government shutdown or disruption more frequently than the first time in 6 years. I mean, I think that's because we always early in the year, very typically run up against the debt ceiling, which can kind of be confused with this government shutdown situation that we're in. And we're here basically because Congress couldn't agree on legislation, a continuing resolution to continue spending. So the government shuts down. Now, the irony of this is that we're probably going to encounter this again in a few weeks here because they typically pass a continuing resolution and then that funding dries up and then you have to pass, a budget again. And a lot of this is happening, because of disagreements in spending. Of course, this is what's happened, historically when Republicans and Democrats can't necessarily agree on some big spending deal. Luckily, this time it's relatively limited, I'd say, compared to what we've seen historically. So I think the hope is that it'll be short term as far as scope, and it won't really trickle into the economy or especially financial markets. And I think that's what we want to get across today in this conversation, is that it doesn't have a huge impact on markets. We've seen 6 shutdowns since 1990, so there's not a ton of historical data there when you're comparing, hey, what exactly is the market reaction function for a government shutdown? Well, the thing is, most of the government continues to operate. I mean, you only have about 25% of government employees actually not showing up to work. Of course, a large number of government employees are furloughed, meaning they're not going to receive their paychecks, but they did just get their paycheck on October 1st. So typically that's a, every 2-week pay period. They weren't even expecting another paycheck for, another week or so. So in that case, they're not even going to really see disruptions in their personal spending or personal budgeting. But I kind of want to, talk through some of those points and analyze that today.
Yeah, and I think that's interesting to note that even though October 1st was that morning was when the government shutdown began, everyone still got paid because that was all lined up, paid for before that. So everyone got paid right at the very beginning of this. So like you said, unless it goes for the full 2 weeks or more, which we have seen before but has been very rare, then there will be no effect at all. And even if it's taken care of in 3 weeks, I think we see very minimal fallout. Okay, they wait an extra week for that paycheck. But then, things catch up. They do get paid for the time that the government shut down. Most government services are still enacted. And revisiting one of the points that you made with there are only 6 shutdowns since 1990, it feels like so many more because I took a look at a list of all the times that this has come up. And there have been dozens in the past few years of times where they're passing a continuing resolution or some kind of appropriations bill at midnight, or even technically going into a shutdown for a few hours and getting it passed, early morning, to where it doesn't even really count as a shutdown. But we've come up against this wall so many times that it feels like every time we reach this point, there's always a big fight. And most of the time they get it taken care of. But this is one of the times that they both held their ground a little bit too hard.
Yeah, and I think it only becomes really that interesting from our perspective when you are talking about these extended shutdowns. I mean, the most recent shutdown that we had, the 2018 to 2019 shutdown, lasted for 35 days. So you're talking at that point, that's a couple of missed paychecks by government employees. That starts to trickle into economic data. You have a contraction of GDP because government spending isn't there. The spending by government employees isn't quite there. So that will impact GDP to some perspective. But as I mentioned earlier, a lot of it's because these extended shutdowns are because of big budget items that are very contentious. Right now, we don't really have that. So I don't think it's going to cause an extended period of government shutdown. I mean, thinking historically, and this has happened under a lot of presidents, but, under recent history, Clinton, it was Medicare funding. Obama, it was the Affordable Care Act, otherwise known as Obamacare. Under Trump 1, it was the border wall funding. So you're talking about these big budgetary items that, are very partisan, that have a lot of contention. In this case, it's a little bit different. I mean, Democrats and Republicans are fighting a little bit about Medicare spending to some extent, but it's not some big, huge budget item that is really, driving these parties apart. That's why I find that they're going to, there's going to be a little bit of give and take on both sides, but you're essentially talking about some of the Obamacare, subsidies that, are scheduled to, go offline by the end of the year. Democrats, of course, want those in place. Even some Republicans are looking for some of those Medicare items. So I think they find some kind of resolution at the end of the day. You're not going to have some huge, influx in spending. You're not going to have probably no give from the Republican side of the aisle. So that's why, at least what we've been considering, kind of thinking a relatively short shutdown here.
Yeah, and kind of like you mentioned earlier, it's only for a few months. That's all we're trying to get to the end of the year. So really, it should be hopefully a fairly easy process. All expectations are pretty easy. Find some kind of middle ground in the meantime, and then you have a few months to really work out your issues. To turn kind of more towards the investment perspective, we're in the early innings, mid innings of this Fed cutting cycle that started and then stopped and then started again. So do you think, what kind of impact is that going to have on the Fed's decision if they can't get, some of these data points?
Right. And so that's where it becomes interesting for us as investors, is that without the government open, we are not getting these regular data points that the government releases.
Because we already missed a few at the end of last week, correct?
Right. So Friday we missed the BLS jobs report, which is probably the most notable job report that you're going to get on any given month. It's the most recent, kind of newest in the new month turnover. So as we entered October, you get the September jobs report, which is the one that we missed because of the government shutdown. Well, that's the most recent jobs data that you're going to get. Now the Fed doesn't get that. Us as investors don't get that because the government is shut down. And the issue that you're bringing up is that the Fed is trying to make a decision about interest rate cuts when they're trying to balance unemployment and inflation and decide which way are they going to move, as far as, are they going to hold rates steady or are they going to continue to cut interest rates? They need that jobs data to determine how weak or strong is the U.S. labor market, because if the U.S. labor market's stronger, they feel like they can hold off on cutting rates. If the U.S. labor market's weaker, they feel like they have the green light to continue cutting interest rates. So they're really trying to balance that, but without the data, it does throw a little bit of a hiccup into the calculus there.
Yeah, especially with, labor being a bigger factor. And, we've talked about it before, the Fed's dual mandate, inflation, strong economy, and keeping labor well in equilibrium. So that's an important data point for them. The one data point they're missing isn't going to change the whole story, but it turns into a bigger issue if this were to be a prolonged government shutdown. Also, looking further into the month, if it continues this way, inflation data, CPI, would not be released either. It would all be delayed, or even if it doesn't run all the way through when CPI is supposed to be released, it could impact the timing of that release. However, we're not going to have another Fed meeting until close to the end of the month. So I think we still have plenty of time to worry about that and get that data out well before the meeting.
Right. And so I think that's why this shutdown is interesting, is because of the Fed and their reaction function and needing this data. I will say, from a historical perspective, just looking back on historical shutdowns, the S&P 500 is typically positive over the course of those shutdowns. So you're not seeing a big market reaction. The VIX, the volatility index for the S&P, usually doesn't move around a whole lot. So you sometimes get a little bit of short-term volatility, but it really hasn't shown to have any massive upswing. Even last shutdown, the 35-day shutdown, which is pretty extended in duration, The S&P 500 was up 6% over that time. So you really can't say that, hey, a shutdown is going to lead to lower markets. It shouldn't really impact your investment calculus. If you're investing, planning for the long term, it's not a reason to hold off. I think we continue to suggest to clients who have cash on the sidelines or cash that they want to allocate, it's still an okay time. There's really nothing has changed as far as the broader macro when it comes to the investment decision-making process. And I think that's kind of critical in what we want to communicate today.
Yeah, and you made a really good point earlier when we were talking about this of, it helps investors focus on the companies themselves, what they're actually investing in. There's less, top line noise that may or may not affect every individual company. And it's, just kind of allows people to take a step back, look deeper into the companies that, kind of quarterly information cycle that we get that doesn't create so much day-to-day noise necessarily, but is, in my opinion, at least, the more important factor going into making an investment decision is what is this company doing?
Right. And that's also why I want to say is I actually think it's somewhat healthy that we're getting this shutdown, not for the government's sake, not for the operations that they conduct, but from a market perspective, just because it gives investors a time to take a pause from all the data. I mean, we see new data points almost every single day, and it can be kind of a drag when you're just trying to focus on, hey, what does this one data point mean for my outlook on the market over the next 6 months to a year? What does it change as far as the Fed, response and things like that? That can get a little bit exhausting for people. And at the end of the day, investing is all about finding companies that have, strong earnings, growth, cash flow, and making sure that you're well positioned in the, midst of the broader macroeconomic picture. And I think periods like this give investors an opportunity to take a step back and look at what's important. It's, hey, what's the Fed trajectory? Regardless of how quickly they're cutting rates, we're in a rate cutting cycle. What did corporate earnings look like? Corporate earnings still look strong. We're on a positive trajectory there. And then you can go sector by sector and look at the reaction as far as which industries and sectors are most poised to benefit. And then 3, you've got the broader AI CapEx and AI monetization megatrend. I mean, so much money is being spent in technology in the AI space. That's a huge macro driver that's powering a lot of sectors. So I think investors right now can kind of take a step back, look at what's important, rather than be too concerned by the individual data points.
Yeah, I agree. It's kind of nice to focus back on companies, especially we have our third quarter earnings season coming up. So hopefully we can, divert some of our attention away from the government towards those companies reporting earnings. We'll only have the very first companies to report earnings likely during the shutdown. However, gives people some time to gear up, do some background research, go into earnings better prepared to pay attention to like what the key pieces really are. Because sometimes when there's, government data, all sorts of stuff, and then you have individual company earnings, there's a lot of stuff to keep track of. What are the important metrics for X, Y, and Z company? I think it's going to be helpful, at least from my perspective, to focus in a little bit more on individual companies rather than having to track all sorts of stuff.
Right. I mean, we've got a quiet couple of weeks here as we kind of lead into earnings season, but I think that is what is exciting for us right now, because you're really talking about, a market that's been, I think, grasping at things kind of since the Q2 earnings season. You're looking at a lot of headlines that are really significantly moving markets, politics playing into that to some extent. But we've kind of gotten back to fundamental market environment. We talked about this in our Q2 newsletter and a little bit in our most recent newsletter, was that, investors are paying closer attention to corporate earnings, to the strong fundamentals of companies, and looking for that to drive stock price reaction. But recently we haven't had a lot of earnings, so it's been, headlines and grasping at straws and following one report after another, data points or Fed, the Fed reaction function. So I think this earnings season is going to be important. That's what we're focusing on rather than this government shutdown. This is going to pass. We'll get through it and then focus on that. I will say it's also important to note that whenever we're talking about these data points that we're missing because of the shutdown, these will come out eventually. So they're just delayed. They don't just get skipped. So as long as the government opens back up before the Fed's next meeting at the very end of this month, they're going to get that economic data. So it's not like it's completely missed, which is the good point about that. And so I think that's just worth noting to our listeners, and especially whenever we're having this conversation, is that, hey, we're not necessarily missing out on anything. It's just delayed to some extent.
Yeah, absolutely. That's a great point. And, even with, delayed or otherwise, the BLS jobs data, as we mentioned in our newsletter that you brought up, it has been highly variable recently anyway. And so having some extra time to go back and get those revisions to it is probably a good thing anyway, because it could shift drastically from one way to another. So it's already taken with a grain of salt, at least in a lot of circles. So I don't think a little extra time is going to be a bad thing there.
I think that's a really good point. I mean, I even listened to Stephen Myron last week, the new Fed official, and he was talking about alternative data sources, on more of a forward-looking basis. A lot of these government reports, they're backward-looking. Mm-hmm. So I think, going back to other things that investors can look at during this period is, hey, you can look at more forward-looking data. You can look at private resources like ADP payroll data. Mm-hmm. Well, they continue to report even when the government doesn't. They're a private company. And then you can talk about other things, if you're talking about housing, maybe a Zillow index. If you're talking about inflation, looking at third-party inflation reports, things that are showing the same kind of data but in a different, a different package, and not coming from the federal government. We've already made comments saying that we prefer the ADP jobs and payroll data over the government data because of some of the things that you just referenced. So, if anything, it gives people an opportunity to seek out other data sources and just broaden their horizon as far as how am I making my, investment decisions and what economic data sources am I pulling from.
Yeah, I think that's a great point to leave us off with. And, great little conversation about, a big issue, but, I think it's going to all be resolved fairly quickly. So thanks for joining me, Victor.
Yeah, thanks, Hunter.